invite Swarup Mohanty, who is the VC and CEO at Mirae Asset Investment Managers, to talk about the outlook 2026 on different asset classes and a lot more. Swarup, good afternoon. Thank you so much for joining in. Always a pleasure speaking with you. And I can't believe we're already talking about 2026. It's been a year which has been too quick. But at this time, we're also talking about rupee at a record low. But you are saying 2026 is coming with good outlook for the equity segment. A lot of factors contributing to that. Considering what we are seeing with rupee currently, do you think the other things also hold on? And this is something which could reverse in 2026 for equity markets?
Hey, thank you so much for having me. Yes, 2026 onwards, not just 2026, I believe 2026 onwards will be a very different era of investing from an investor's perspective, because clearly the underlying regarding each asset class has changed. I mean, look at the statement yourself that rupee at 90 changes a lot of things for a lot of people across the world and across the country too. I mean, today in the 30 years that I've been in the industry, the first time I'm seeing gold reserves at a sovereign level more than dollar reserves, just saying that the dollar may not be the same as what it was. And it brings a very strong commodity play back into everybody's portfolio. If sovereigns continue to buy gold, why shouldn't I be buying gold? So hence my first question, is it right to sort of say that gold should remain a hedge in a financial portfolio? Is something all of us need to think. Over the last 3 years or 4 years, the kind of listings that have happened in the Indian stock market, more of the listings have been on the mid and small cap space. So the erstwhile thought that bulk of your or core of your portfolio should be large cap, by virtue of just wanting to own the length and breadth of the market, now completely is changed, because you need to own more mid and small to get to these new industries. I mean, the asset management business, say, is completely in the mid-cap space. The hospitals which are unfolding in this organized sector is in that space too. So, and traditionally we've bought a lot of large caps in the past. In the last 3 years, we've just bought small caps a lot. So maybe 2026 is the year to accumulate. 2026, accumulate mid caps is the point I'm making. And the third most important part, I think the investor base has changed dramatically. When you look at the young investing, I'm pretty sure they will look at very different products. And just look at the investor flow into assets over the last 2-3 years. Their view of what used to be a risk-averse investment environment during my era of investing is moving to risk-seeking with the younger ones coming in. So when you look at these 3 points at the backdrop of investing, I think 2026 onwards, the review of the portfolio will look very different. And I personally believe behavior towards your allocation of money is more important than which asset class you choose, because the rules of each asset class has changed.
Okay, the rules of each asset classes change. Mr. Mohanty, thanks very much for joining in. That's actually a very interesting point that you brought up, that I think people are just now looking at not only equities, but a mix in terms of the assets that they should have in their portfolio. So in that context, what would you probably advise in terms of how much equity should be? What other assets are you probably advising to have in your portfolio?
I mean, the erstwhile rule of the blanket rule that I would read across social media would be 10% to gold as a hedge. I'm questioning that to start with. I think gold will surely move towards the core of the portfolio. Almost 30% of the individuals in India, or 30% of money of individuals in India, is locked into physical gold. Maybe some part of that should start getting into digital gold, and it's a better way of owning that same asset class. If the sovereigns are owning gold, then you should also own it in this space, is my personal opinion. Second, when you look at equity, and it's a factor of your risk profile, I think you have to now graduate more towards mid and small. The erstwhile cliched advice of 70% large cap is not holding good anymore. I think you have to move more to a 50-50 sort of allocation. 50 towards large, the core of the portfolio, and 50 to mid and small is the new sort of way of looking at investing, because the number of stocks that are available in mid and small are far bigger than what they used to be just before COVID. So that rule needs to change also. And I think some of the rule-based options that you are getting on the factor side is something which you can sort of add to the core of the portfolio to make your portfolio more balanced. Then it depends on your return projection. But the great part is you are getting a plethora of schemes available from the asset management industry, and how you mix it and form your portfolio is going to determine the wealth creation process rather than just sticking to one asset class.
Oh, absolutely, because portfolio allocation basis the risk and goals is something that we talk about very often on the channel as well with all of you. Swarup, what kind of earnings growth are we targeting? Because that was something which has been a concern. We've been talking about valuations as well. Are all these things going to be a key factor in the recovery that you're going to see in mid and small caps?
Yeah, I see, finally, it's all about earnings. And if you look at our same view in the beginning of this year, we had seen nothing to support that. Hence, we had said that 2025 should be a year of accumulating money. Till we don't see clear sights of that, I fear that will be the view for 2026. Now, please understand, at the end of the day, the risk to buying and the risk to not buying. At this moment, in a growth economy like India, not buying is a bigger risk. So you have to continue accumulating all these assets. By virtue of flows to the industry, I just want to make a simple point that people have bought a lot of small caps up to the run-up of 2025, maybe to balance your portfolios. The segment which did not see flows is mid-caps, and I think that's something which should be looked at much more constructively in 2026 than we had in the past. And don't go by trailing returns. It's a new world altogether because of the number of stocks that are now available in that segment. And please understand, these are better balance sheets than the smaller companies. So I would stick my neck out and say, accumulate mid caps a little bit more than what you did in the earlier last 2-3 years, and it'll help you build a far stronger portfolio.
Okay. All right. We're going to leave it on that note. Thanks very much for joining in and giving us your 2026 outlook. That's Mirae Asset Management talking about the markets and the outlook that they have going into 2026. We'll take a short break, but we'll get you Vinay Rijani for a technical check on the other side. So stay tuned for that.